Good day to one and all. This is Dr.Sivaraman of iknowindices.com. So I'll be giving the review part of the Asian sessional live market analysis and the forecast webinar what I gave on 12th of October. So I gave the forecast for the entire week, 12th to 16th of October. And today we are on 15th of October. I'm supposed to do the review on Friday, and I'll be out of station tomorrow, so that is why I just preponed, and I thought that I can do the review today so that I can also explain to you what could happen during today and tomorrow the market moves. So this Asian session live market analysis and the forecast webinar will be given on Mondays and Fridays, and in that I will give the session wise forecast of iknowindices.com. So I'll give the session-wise forecast for the week. That is, each day there are 3 sessions, and all the 3 sessions I will give the forecast. And on Friday, I'll review the forecast, what I given, and find out the accuracy of the forecast and the dependability of the forecast. So we will compare it with that of the actual market moves and find the variation. And if there is more of a similarity, then we will be in a position to conclude that it is more reliable and dependable. Then the expected range in the 4 majors and 2 commodity pairs are also given during that particular time. This is mainly for you to do the position trade in the event if you are interested. Otherwise, you can find out how far, what could be the bottommost level and what could be the topmost level for the week. So that accordingly, you can plan and keep the stops if needed, etc. That is why the range in which the currencies are expected to swing is also given during that particular time. And many of the people contact FX Street for my contacts, and invariably they contact through my profile and then later on send a message. So for the benefit of those who wanted to contact me, I have given the email ID dr@i-knowindices.com, and my Skype chat ID is iknowindices@hotmail.com, so that you will be in a position to contact me without any delay, without any uncertainty. Now coming to that of the webinar part of it. So the webinar consists, the forecast is derived based on the statistical algorithm, and we will do the market reading and live market analysis after reviewing the forecast, and then I'll briefly touch upon the trading strategy. Now, this is the forecast I gave for the second week of October. The market is expected to make the trending move during the particular time, 12th to 16th of October, that is till tomorrow. They are expected to make the swing and rise moves. And if you notice carefully that they made the slide in the case of GBP to 1.52, mainly to gain maximum level, almost close to that of the extended stop end, but it is actually a wide range either way stop ends. So they are not expected to bring in the shift in trading zone, and as expected they made the drop for that of the CPI data, and then subsequently they firmed up. And then we have seen yesterday also they made the small sideways move and then started rising euro and GBP. And today we are on 15th of October. They are expected to make the swing and firm up move during the Japanese session up to 7 GMT. Then they are expected to make a sideways move or a slide during the European session. And then they are expected to make a rise or a swing and firm up move. And tomorrow again, they are expected to make the similar moves. And the firm up could be the rise on Friday. So instead of firming up, because they have been holding it for such a long time and accumulating all the sells, so automatically They have to make the rise in order to induce the short sellers to come for the short covering. So they could make the firm up during that of the Japanese session, induce the long hold, induce the short sellers to go in for a short covering during that of the Japanese and the US session of tomorrow. Today they are expected to firm up, and that firming up might be gaining about 50 to 60 pips in each as the net change, and that way they will be able to hold and absorb all the cells. And whenever they breach the psychological level 1.15 in the case of Euro and 1.55 in the case of JBP, many people tend to go in for a short selling, thinking that it will retrace before going further upward. And the players are expected to make one quick upward move like what they have done it yesterday. They breached 1.54 in the case of GBP. Without coming back to that 1.53 area, they simply gained it to 1.5450 and then started coming to 1.54. That way, anybody who has done the short selling above that of the psychological level were not given the profit booking opportunity. And those who had sold at the highest level were given a profit booking opportunity of 20-30 pips. So that way they try to handle the market. So you have to be very cautious. So wait for the drop during the European session and try to take the buy positions in Euro and GBP. Thereby you will be able to profit. So market mean swings, you have to keep it in mind. They will not straight rise or straight drop. If that is a situation, then everybody will turn long when they are making a straight upward move. So when anybody takes the buy position, they will test their patience before making further rise. So you need to understand that how exactly the players are going to handle the market with the help of the forecast. So this is a statistical algorithm based forecast, and which is more reliable. You can follow it. And so this is actually based on the extraneous factor which influence the human decision making, which is a very complicated way of calculations, and with which I'm able to give the forecast, and you can find out how reliable it is, even though I have been giving in a forum like this. But still the players are not in a position to change that type of moves drastically, because that is how the traders are expected to commit the positions and the players are forced to make the moves in the market. That is why I always say that market is predictable. It is not either way possibilities. It is predictable. Then we'll come across on Tuesday. I'll come and give the forecast for the next week, and that will be for 19th to 23rd. And the market is expected to continue to gain the level, swing and rise during that of next week. Then with regard to the range in which the currencies are expected to swing, the mathematically estimated levels are given here. And if you see that they came down to 1.1344, and in some platform it came down to 1.1268, and then subsequently went up to 1.1484 so far. That is, and they have breached already the high 1.1490. Then in the case of JBP, it came down to 1.5201, and from there they started gaining the level to 1.5485, and they got still a great potential to go upward, and they could change the market sentiment by aggressively gaining the levels in the case of GBP. Carefully watch and trade, because they made the downward move for the UK CPI, and so they made a quick drop from that 1.5350 to 1.52, and people thought that market is going to be bearish, and then subsequently all the way they gained the level and gone above that of the level wherein they started it. But still it is not an extended stop, and because they are not recovered the entire thing and gained on the same day, they gained only the next day, yesterday. So it is unlikely to go in a very big way on the upside as a shift in trading zone. It is nothing but widening of the trading zone is happening in the market. Then in the case of yen, 118.70 is the low and that is intact, and the high 120.27, and they are likely to go up suddenly by gaining more levels after the downward stoppant to 118.70. And if you watch carefully, that already USD is in positive net change, and all along on Tuesday and Wednesday they have been handling Euro and GBP cross, sorry, the European crosses. So they gained quickly the levels on Monday in the case of Euro to 1.14, GBP came down to 1.52. As a result, we have seen that Euro GBP cross has gone up. So, then subsequently, they gained the levels in the case of GBP holding Euro at 1.14. As a result, Euro GBP cross has come down. So after handling the European crosses, they again come back to that of the commodity crosses and to that of the yen crosses. They are likely to, they are showing the positive net change in the case of Euro USD as well as USD yen. They are likely to gain the levels in both to bring in the contrarian move. And then they could go above that of 120. Then in the case of CHF, they came down drastically 94.88, 89, and then came down to 82, and after the quick downward stop, and they are gaining the levels, and it is expected to go up similar to that of USD yen. So USD yen and USD CHF could gain the levels when Euro and GBP are also gaining the levels as a contrarian move. USD CAD, they came down to 1.2902, and today's low is 1.2904, and then they are expected to go up again above that of 1.3067 during the course of the day and tomorrow. Then Australian dollar, they came down to 71.99, quickly reversed and went up to 1.7352 now. 1.7378 is the high they set it on Monday, and they are likely to breach that and go above. So in all, you come across that the USD weakness is seen in the case of the numerator currencies, Euro, GBP, and Australian dollar. But unlike that of others' expectations, they are expected to gain the levels in the case of USDN, USD CHF, and USD CAD as a contrarian moves. So when they make such contrarian moves, so it is neither USD gaining nor USD weakening. So if you try to relate the US dollar index to find out what could be the next move in the market, you might be misguided, because the US dollar index will be influenced positively by that of Euro, GBP, and Australian dollar in rise, and negatively by the rise of USD and USD CHF and USD CAD. As a result, you might come across US dollar index might be range bound. So people might get confused. So then they will start looking for other alternative correlated index. Now coming to that of the market reading. So I noted down the initial lows and the highs in 4 majors and 2 commodity pairs by 3:30 GMT. Euro formed the low 1.1462, which is intact, not breached. 1.1484 was the high. They just breached it and went up to 1.1490, still holding up around that of 1.148486. So they are likely to go up during the late Japanese session, and then probably during the US session they are expected to make an upward stop and a slide. And in the case of GBP, 1.5461 is the low, which is intact. 1.5485 is the high, which is also not breached. And yen 118.70, 119.17, they are not breached. The low and the highs are not breached. So euro alone, they just breached the high. In USD CHF 94.88 was the initial high. They just breached it by 6 pips, 94.82 and 94.88. They are likely to come up. Just during the start of the webinar, they had done it, and they are likely to come up after a brief downward stop. They are expected to make the gaining moves. And 0.9502 is intact. They are not breached it. They are likely to breach it. Then in the case of Canadian dollar, 1.2910 was the initial low. They just breached it and came down to 1.2904 and went above the 1.2910. So you know that in the case of the commodity currency, USD CAD, they normally make either way stop-ins. So they had done the downward stop-in, and they are likely to go above the 1.2939, make an upward stop-in and bring in the range, widen the range during the day. Then in the case of Australian dollar, 0.7298 is the low, 0.7345 is the high. They just breached the high, went up to 0.7352 and come down drastically to 0.731820 and still not breach the low, so they are likely to go up during the day. So there is a question, what are your expected levels for USD CAD by end of this month? Do you think it will reverse to 1.2516 area? No, it is very unlikely. It could come down to 1.27 area maximum and then reverse again. So we will think of the possible trades. Other day on Monday, I gave the trades and they're all showing profit on that day. Probably those who have followed it might be understanding it. Now I'll go to the editing mode, because in the PowerPoint presentation mode, I'll not be able to type it. In the slideshow mode, I will not be able to type it. So I come to that of the editing mode in the slide. So we will try to identify the trades. In the case of euro, 1.1484, they are holding it to 1.1486. So we'll try to take a buy position. $1.1486 with the exit of aiming for about 30 pips, and stop will keep 30 pips below. $1.1456. Then in the case of GBP, they are not breached the low or the high, so let us avoid taking a position there. And also it is showing a net change of 2 pips, negative net change, and euro is showing positive net change. So they could hold the GBP and gain the levels in the case of euro to start with. Then you will, Australian dollar will try to take a buy position, 73.17. And exit 30 pips above 73.47, and the hedge order will keep 30 pips below. So these two are the trades. I'm just taking it before you, and you can find out what happens to those trades later on. And if you look into that of the live market quote page, I will come to the top. If you look into that of the live market quote page, you find that Euro and USDN are showing positive net change as a contrarian move. GBP and CHF are showing negative net change as a contrarian move, and USD CAD and Australian dollar showing the USD weakening move. So you find mixed moves are seen in the market. So understand they are handling the crosses by that, and tomorrow they will come to that of the majors in a big way. Till such time they will try to handle the crosses. So when they are handling the crosses, focus on the crosses as such. Then I come across another question, Grace. Sir, for every session, example Japanese, London, in US, when we want to plan the trades like what you have told us to do in the demo, if we missed the boat like on Monday when I kept the price too late in the demo, how can we readjust our calculations? See, normally when we keep the limit order, we wait for about 10 to 30 minutes, and if the order is not filled and we find that market is not coming down when you kept the buy order 10 bits below the market, we can modify. So 30 minutes, if it is not coming, we can modify and buy it at the market. If the gain is about 2 to 3 or 5 pips, but if they gained 30-40 pips, don't buy. You just forget about the trade for that session, and again they will come down. At that time you can buy it, because market means swings. They cannot continuously rise or continuously drop, and they will quickly make a rise in order to induce the short sellers to do the short covering, and later on come down again, hold low, so that those who are taking the long position after the rise in a hurry will liquidate the long positions. So when the other people are liquidating, the emotional traders are liquidating the long position, you can buy at a lower level so that you'll be able to happily see the profit when they are going upward. So also keep in mind that hedge order, because we are trying to take the buy position at the higher levels. So always the hedge order should work. We should not keep the stop just below that of the supports and things like that. The support might be around 100 and 150 pips below, and if you keep the stop, and unfortunately if they come down like how they had done it in the case of GBP and hit the stops before making upward move, will incur a huge loss. So never do that, and don't think and call it as the 1:3 ratio of risk reward. Probably the 1% itself is a very big risk of keeping a wide stop. So always keep in mind, a stop should be an optimal level wherein you will be able to accept the loss, and also you should be able to earn back the loss in next trade. If the loss happens for about 150, 180 pips, probably you may have to do about 3 to 5 trades to compensate that. Then you lose your patience and you become emotional. Again, if you become emotional during the time of trading, you are expected to do only distressed trades, and such trades invariably lead to further loss only. So keep in mind that you have to calmly trade and understand that near that of the low we can take a buy, or a buy above that of the initial high if they stay above that of the initial high for more than 30 minutes as a technical trade. Otherwise, we can only take a sell position near that of the high and book profit when they come closer to the So you have to identify how we are taking the buy or the sell above that of the initial high. If they just make an upward stop and above that of the high in less than 30 minutes, come below that, that means it was only a stop. And then if they don't breach the high what they are set in next 30 minutes, you can take a sell. But if they hold above that of the initial high for more than 30 minutes, that means they wanted to make further rise. And also the forecast says that market is expected to go up further during that of the Japanese session. And European session start, they will make the higher level swing and book profit and lighten their position. Quickly gain the level, lighten their position, and then make a slide so that those who have taken the long position after the rise might liquidate the long. Then later on, they will absorb all those buys, sells, and again gain the levels. So in that process, what happens? The players become net long holders, and the traders tend to develop their short sell positions. Then when they quickly gain the levels for Friday, then all the traders who've gone for short selling will come for short covering. Then the players distribute their buy positions to them and square up all the positions and take away only the profit. So they aim to earn money and only the profit from that of the market. But we talk too much about that of the economic conditions of various countries and talk about the technicals, fundamentals, all those things. But the players only look into that of the traders' committed positions. That is why I always say they create the market sentiment by dropping or gaining the market levels quickly and then change the trend by simply giving surprise to that of the traders. And if you watch carefully in many of the webinars and other descriptions of the analyst, they often use the word, I was really surprised. So that means that they are not envisaged the market can also go against that of the technicals and fundamentals. So if you become subjective, thinking that the market has to move in tandem with that of the technical expectations and the fundamental expectations, then the objectivity is lost. Then invariably we find that the market continue to give the surprise. Once the surprise grips in, then we become emotional. We do not know what to do with that of the trade or holding positions, or we try to emotionally enter into the market. After the drop, we take a sell position and see that we are the last one to sell in the market. Afterwards, the market started rising. And similarly, we might become the last one to buy after the rise. Then afterwards, the market started sliding. So avoid doing such trades. So always see that you are not under the grip of emotions. You are not influenced by any of these technicals or fundamentals expressions or any emotional talk of the analyst. Then see whether you are doing a logical trade, buy near that of the low or a sell near that of the high. Always ascertain that. When you look into that of the charts, you fail to understand today's low and high. You try to understand only the lows and the highs for the season. Then you are not in a position to understand that whether it is a buy level or a sell level. But if you look into that of today's highs and the low, then you are able to understand, okay, market has come up far off from that of the low, what they are set around 1.04. So after coming from 1.04 at 1.14 level, if you think that it has gone up so much, it will retrace downward, then it is your own assumptions. So if you try to trade based on such assumptions, and when you are comparing to that of the long-term charts, invariably you find that the market is not respecting all your assumptions. So keep in mind that we need to follow the player's intentions and trade accordingly. Then Michael has got a question. Did you say you would be speaking again next on Tuesday next week instead of Monday? You are right. Monday again I'll be out of station, so I'll not be in a position to present the forecast for the next week. So Tuesday I will present the forecast. Tuesday 20th of October I will give the forecast for the next week. Then calls. Please can you clear when we have to write low on the high and how to take positions. Okay, now I will show the slide. Daily initial low on the high set between 2:30 and 3:30 GMT. They set the low by 2:30, they set the high by 3:30. Or if they set the high by 2:30, then set the low by 2:30. So after that, you find that that becomes the after 3:30, exactly 3:30, 3:35, you can note down the initial lows and the highs. Hope it clears. Then that will be the mid session, mid Japanese session. And the mid sessions, it is not advisable to take the positions in the case of the majors. We can take only positions in the case of crosses. So what we do is we wait for them to come closer to high or closer to low. And also the spread between the high and the low should be more than 40 pips. Only then we can commit positions. Now, when they come to that of the high 1.14984 and gone above 1.1490 and come to 1.1484, not coming below that. Now they are slightly to come down little bit in order to confuse, and later on they are expected to gain the levels. So they just come down. So in the event if the market goes against us, we have the hedge order to limit the risk. So that is why I always say that expect the unexpected. So we expect the market to go up, but it can also come down. When all traders turn long, the players need to come down, hit their stops, and before making next price. So for that they may come down. And in the event if we are hedged, and if the hedging is making loss for 10 to 30 minutes, close the hedge and keep another hedge order below that 10 to 15 pips. And once the market start making the upward move, you trail the hedge order until you are able to keep stop at entry. Then try to aim for 30, 45 pips or 75 pips, depending upon the momentum in the market. So normally we take the sell near that of the high, buy near that of the low. That will be the basic trading. And if you buy above that of the high, when they stay above that high for more than 30 minutes, then it is referred as a technical trade, or people also call it as a breakout trade. But in the breakout trade, they only look into that of the level and they don't give importance to that of the timing. So always give the timing also. The timing is also important. When they just go above that of the initial high and come below that in less than 30 minutes, that means it was only a stop point. So during the upward stop point, if you try to take a buy, it will be incurring loss. Instead, if you find that they have gone above that of the initial high and stay above there for more than 30 minutes, then it becomes a technical trade of buy above that of the high or sell below that of the low. They are the other type of trades. Hope I explained it. Any other question? If you got questions, kindly ask me. Otherwise, I'll wind up the webinar. So Euro I had taken a buy position, and AUD I had taken a buy position. Other currencies I have not taken. Let us see, and kept the hedge order to limit the risk, and 30 pips profit taking order. Okay. Sharon has got a question. I have sell position in Euro and GBP. and they are both hedged now to 30 pips. Okay, you're taking a sell, expecting euro and GBP will come down, and the hedge is filled. And you have to watch, hedge is making profit. That means what? They gain the levels in the market. So the next step, what you have to do is, you have to keep stop at entry in the hedge orders, hedge positions. I cannot put the trigger to close my original buy position. And see, already the market has gone up, and we have to find out how much more it will be able to gain. So at the moment, the market upward momentum might get reduced. Only the market, if it goes up for short covering, they quickly gain the levels, and then short covering will come. Then the players will try to wind up their positions. Already we have come to Thursday, so the players may not accumulate more and more buy positions. They will only quickly gain the level and distribute their buys to that of the short sellers. So in the process, market will be volatile. So it is not advisable to close the buy sell positions and try to maximize the profit on the buy side. And in case if they are just making a big drop as an extended stop and then you got hedged, then you can close the hedge to maximize the profit on the buy side. Not now. What can you recommend? Shall I wait for the market to slide during the European session so that I can close the sell? Yes, you can close the sell during the European session, slide, and then keep another hedge order. Then when they gain the levels, you can put profit on the buy side. Or you can keep stop at entry in the buy. When they come down, you trail the hedge order to lower the spread between the buy, sell as well as the hedge order, and then subsequently when they come down, you close the sell first and then later on maximize the profit on the buy. And if your equity permits, you can take another buy and book profit in both the buys also. A higher level buy and a lower level buy and book profit in both. That way also we can do it. There are various trading strategies available, as I explained. You have to innovate it. Okay, I come to the last slide. So I take opportunity to thank FX Street for the facilities provided to present the webinar. And also we are using the YouTube to present the webinar. So soon after the webinar is over, the recording of the webinar will be available. Each and every webinar is being recorded and it will be available in YouTube and also in FX Street. And in FX Street, if you want to go through that of the recorded webinar, you can go to fxstreet.com analysis, fxstreet.com/analysis/forex live analysis room interviews /archive. There you will find all the webinars are being recorded. The recorded webinars are being listed. I think I have the slide. Okay. Then you can also see in my blog, iknowindices.com/blog, I give the link for every recorded webinar. In case if you don't find all those things, then you can straight away search in YouTube, Dr.Sivaraman Asian session. You should be able to get the webinar. So, okay, the link is given here. FX Street has given kind enough to give the link. So, you can just click the link and get the recordings of the webinar. So very soon we will be making arrangements to give the quick updates or the current market condition. That will be a brief note about the various quick trade opportunities which we could come across. So other day, that I was explaining that GBP could come down, and many of the people who were contacting me through that of the chat, they got the info that GBP is going to drop, and they just made about 125 pips profit. So that way, I will try to give the calls beforehand, and then probably you will be able to make money in such trades. So I thank you one and all. Wish you all happy trading. See you on Tuesday.